Hello viewers, welcome to this new video, and as promised today we are going to discuss about the Q3 FY22 results, and there are a lot of insights to take out of it. We will walk you through, and to do that I have with me Abhishek Murarka from Multipe. Abhishek is a close colleague, and we both work a lot on the data analysis part, and Abhishek has worked a lot in building tools which will help us to do deep dive on the Q3 FY22 results. But welcome Abhishek. But let me hand it over to Abhishek so that he can explain what Multipe platform is all about.
Thank you, Saurav. First of all, thank you for. Personally, I love the work you do. I think you have maintained a balance of, I would say, analysis, qualitative, and a lot of quantitative. Go by that adage of quant plus qualitative. So my pleasure to be here. Since you asked what is Multipe, joined Multipe last year to build with the early founders. And what we have built is, I would say, an integrated platform for investors. When I say integrated, investing has three aspects. One is discovery of ideas. Second is your analysis. And third is the buying and selling. So Multipe has been designed in a way that all three can happen on the same platform, from ideation to your execution to building your watch list. Everything can. In simple terms, I would say it is a specialized integrated platform that we're trying to build. We have some good investors on the end. It's early days, so look forward to seeing more people.
Sure. And, I am also there on Multipe. I have used it. It's a very good tool for focused discussion where, you can discuss around these stocks. There is a lot of data to explore. And many times as a retail investor, we don't have access to that kind of data. So in that way, again, Multipe helps to bring all that data together to have, very quality focused discussions around stocks. And as Abhishek, whether it's discovery or, whether it's buy or sell. So we are providing the link for the Multipe app below in the description box. Download it, give it a shot, and I'm sure it will be very useful for you. Now shift to the quarterly results. So let me give a little bit of background why we are discussing this, because there has to be a purpose. And there are two ways investing is done. One is bottom-up approach where you start with the stock, but the other way is top-down approach. And one of the ways of doing top-down is looking at the overall market. And that is where I feel looking at, the quarterly results and all makes sense, because you get a sense of where the overall market is going, whether you want to do a valuation of Nifty, or you identify the sectors which are doing well versus not doing well, or you want to mix techno funda investing technicals, but you want to see are there triggers on the fundamental side on the sector and then identify the stock. So I find a lot of value where I try to do this exercise quarterly to track my companies as well as identify the opportunity on a top-down approach. So Abhishek, I have seen you share a lot of data on the quarterly results, very exhaustive data. What is your purpose of doing and tracking the quarterly results?
So Saurav, the reason for doing this exercise came from a realization that 2022 is not going to be the same mark 21. Like we all know that 2021 was a relatively easy year, and I would say many of these subpar or mediocre companies have also done very well. The idea of this exercise was to kind of separate the good companies from the bad, and difficult quarters, those things more clearly. And we are seeing right now that while the top line numbers for many companies are coming good, pressure, the thing that one thing that market is watching very closely are the, I would say, operating margins and the gross margins, because that is where the, I would say, pricing power, whether you call it the integration or the supply chain robustness of the company comes to fore. So idea was that many of us are kind of confused because last year we had many good names, but right now we have very few. So the idea was to identify two things. To identify, I would say, sectoral level trends. You get to do that, see that only when you do bottoms up, because then you can do ad. So that is one idea. And the second is to just out of curiosity to see like which companies are able to weather the storm. So since we have been doing this, as we speak, we have done an analysis on say 1,100 companies which have declared result week, and they cover around 82% of the market cap. So the insights which we get from this, I would say, is a fair representation of trends, and we'll obviously talk into
Very
those in more
interesting.
detail.
Very interesting. So what we are going to do is we are going to present top 10 insights out of this whole analysis. And these insights will be actionable insight, and that itself will prove what is the worth of doing this kind of analysis. And so let's go ahead. What we will do, Abhishek, maybe we will try with the broad level analysis insights. We'll start with overall market, how the insights look, and then we'll try to deep dive at a sector level, subsector level, what is doing good, what is not doing good in terms of top line growth, in terms of margins, some interesting companies. So maybe why don't you start with, what is your broad analysis and overall, macro level insight?
Get into numbers, which will be sectoral numbers, but if I were to quote you numbers for the aggregate 82% market cap that have the revenue growth YOY is 26%, which is very robust. But if you go down to at the EBITDA level, this comes down to around 13. Even in that, if you remove, say, maybe top few companies, the EBITDA growth, excluding the top 5 companies, come down to below 10. And that is where the game entire is. What I'll do is I just quickly show you. So what we have here is, this is the aggregated numbers. These 3 columns, we have the rules for current quarter, preceding quarter, and the YOY Q3 quarter last year. We have the numbers for revenue, EBITDA, and PAT. Now, what is this? If you see the overall results, 26% revenue growth YOY, 9% revenue growth QOQ, but the pressure you see quarter on quarter, there's hardly any EBITDA growth at an absolute level, despite revenue coming in, which clearly means margins are shrinking. While we see this, we see surprisingly the PAT numbers are still doing fine. Now, this can be 2 reasons. One main reason would be that we all know that corporate India has balance sheet deleveraging, and the other bit is the capex cycle is yet to play out. We are possibility of capex cycle playing out. So even the depreciation component is smaller because many companies might have a WDV balance sheet accounting. So I would say this is not what market is watching. Market is watching your EBITDA. If we see at a sectoral level, top ends, you see we have here the YOY and QOQ trend. Few sectors who have seen good, robust, I would say, are these. You have industrials, IT, materials is of commodities and materials and metals, real estate, power and utilities, plus your energy has done well. Sectors which have taken a beating are, I would say, consumption, discretionary service, healthcare has taken a major beating. So the one clear finding is few sectors, my top right now happen to be industrials and happen to be IT. There are parts of, I would say, financials, which are looking very nice. But even within that, one has to understand and be selective. The sector which has seen a major drawdown is, say, pharma, healthcare, I would say commoditized manufacturing. So we are discussing why is that happening. One main reason is the input pressure is very much visible because globally what has happened is the input cost pressure is a function of demand and supply. Supply has been constrained for many of these raw materials. For example, China has cut down on, I would say, supply. That means in many cases, the entire raw material is much more expensive. Then your crude has been rallying. We are at around 95 crude, right? Which no, if you remember, like as little as 2 years back, 3 years back, we had seen negative crude. So from that to think that to be like close to $100, it's come a long way. And historically, Indian markets have, I would say, an inverse correlation with the crude prices. Crude happens to be the main crude and crude derivatives are the main raw material for Indian companies. And that has played, I would say, a major part in what we are seeing in the numbers. What we have here is we have bifurcated at a subsector level also, companies and sectors that have done well. So if I were to show you here subsectors that have done well, now banking has done phenomenally well.
Abhishek, before that, if I can just summarize for the viewers, the takeaways, key takeaways, which I am looking from it is the top line growth has been very, very good. That is something to get excited about. But the top line growth has not been able to convert into EBITDA growth because of contraction in EBITDA margin, because of inflationary pressure. And I think many of the annual reports had highlighted that as a risk when it came in May, June. And then if we drill down at a sectoral level, but still at a PAT level, I see that there is an improvement. The reason being maybe, it's the balance sheet strengthening, the lesser depreciation and no capex cycle. And in terms of industries, if I could see energy, IT, industrials, real estate, or, they are some of the sectors which have done well, whereas healthcare has been badly impacted. Banking looks like something interesting is happening. No top line growth, but still there is a lot of PAT growth. So something interesting happening there. So I believe that's the summary. And should we now jump to subsector level?
You mentioned on banking. Now, if you were to think of investing, you have to think of three brackets. I would say the low bracket is the rural consumption. Then the next bracket are companies that play on middle class income group. You have corporate India. So how I'm seeing right now, based on my analysis, is that the lowest strata, the rural side, is still seeing a lot of. Maybe you can the proxy for this to see the numbers of, say, tractor sales which are not stacking up to the earlier expectation, or maybe even if you go and see the levels of some of the MSME and microfinance companies, we are seeing stress there. But within banking, the strongest segment right now is the corporate loans. We actually are entering into a good part of the corporate loan cycle, wherein the problems have been resolved. Now, if you see the sectors traditionally that have pained the corporate balance sheet of the banking has been the old economic sectors like power, infra, and invariably they have seen the biggest boom in the last 1.5 years. So within banking, which are corporate focused, are actually doing better than banks which are very retail focused, which is counterintuitive because still as well as 2 years back, every bank wanted to become. So if you see numbers of SBI, I think that's a great proxy for corporate loan cycle because they are mostly into corporates right now and the NPAs are at the lowest. So banks have done very well. Within private banks, like in general, I'm optimistic because even the budget has relation for a new capex cycle. So one has to be, I would say, with the prominent names to play the cycle. Consumer finance has done well. This is main finance. The third segment, which I found very interesting, is the entire telecom piece. Now we should talk about this, Saurav, because for I would say years, telecom was a game of pricing war which was playing out. And there has been a major consolidation. Right now, we have hardly 3.5 in the telecom space from being 10 plus players. If we see the numbers, I'll show you numbers of Bharti Airtel Ebitda in this, but if someone checks, it has moved from the range of 30s EBITDA margin, 30% to mid 40 to now hitting 50%. So that is something very interesting that is playing out. Apparels, accessories, and luxury. So in the income bracket, I was telling you the lower setting, but the discretionary spend of, I would say, middle class to upper middle class has been very strong. And that is pretty logical if you see the kind of salary hikes that have happened across, say, IT companies or maybe higher end roles in pharma companies or manufacturers. They have been very robust. So now that is showing in segments like apparel, luxury. See the numbers of Titan.
There is one more theme Titan I see here when you discuss apparel, because I think because of economy closing, some of they operate through the stores, they were closed. If we connect apparel, if we connect restaurants, if we connect hotels, resorts, looks like all of them, because of economy opening, they have done really well. And, they look back on track. So that itself could be a theme which has started with the economy opening.
Absolutely. Since you mentioned, let's look at this. When you say opening, and let's look at numbers. It's airlines, restaurant, I would say resorts, hotels, movies, entertainment. Now look at these numbers. In fact, look at the QQ numbers also, like the revenue growth between 50 to 150%. And that is also showing in the EBITDA number. Movies, this L2P is loss to profit. And if you see even at the PAT level, this is a very strong theme that is coming, that people are not shying away from spending in this segment.
And they have got their break-even quarter now. So it's all about sustaining it.
Absolutely.
Interesting.
So now another interesting thing is, we'll skip tobacco. Tobacco also had a safe in this budget. Like the biggest fear is, will there be more taxes on cigarette? This budget didn't have it. But let's look at, I would say, the next segment, metals and mining. Here, I see the sector as steel and metals and mining apart from steel. So steel, while steel is seeing a lot of margin pressure, other sub-segments of metals such as aluminium, copper, they have been reporting, I would say, very good numbers. We can get into details later on. Segment that is doing very well, I would say, is the entire space of QSR and food retailing. This again, logically, they go to that middle bucket. Now that middle discretionary bucket is doing very well, and that is showing in the food retailing also.
One more thing I see here, there are a lot of subsectors where there is very good top line growth, but the margin growth, EBITDA growth is lower. But if we look at textile, or you said food retail, I think these are some specific segments where top line is great, but the EBITDA margin has also improved, which is much better than others doing well. And I think fertilizer also, you're highlighting textile and fertilizer, they're like standing out.
IT has been strong, and let us look at, I would say, sectors which have not done so well.
And I think one more sector which has not at all done well is automobile. And I think that looks obvious because the demand revival has not yet started. And I think there is a top line degrowth, one of the big sectors with top line degrowth, and then the margins have also gone for a toss.
Absolutely. And we have it on the screen, sort of. So there are these sub-segments wherein clearly the trend has not come out very well. You see here a lot of most of red.
Yeah. So your pharma, your chemical, your auto, commodity chemical, they are some of the sectors which are really performing bad. Ancillaries, yeah. But maybe from a 1 year perspective, the opportunity might come in one of them, given, we need to track their cycle when they're bottoming out in their cycle.
No, absolutely. But the biggest challenge is knowing when the cycle is turning which way.
Yeah.
So the question right now is, say, if pharma is facing pricing pressure.
No, but this is very interesting because it gives you a fair idea where, if you want to play the momentum, where you have to play the momentum. If you are looking at a revival, which looks most likely to revive in the near likely revival candidate like banks we talk, and then which are the one which should be there in your watch list, but don't catch a falling knife, let it bottom out, and then you will have some kind of value chase later on. So I think the analysis clearly, distinguishes between these three different, categories.
Yeah. So we have focused which are sectors which are seeing a good, I would say, still having tailwinds, and we have on the screen which are facing headwinds. What I will do sort of is we are also making more insights from this. This is a WIB process, but more than happy to share it. We'll be having this on Multipe also. We'll be putting out sectoral trends with, I would say, mapping of what of companies within each sector and subsector have seen decent growth and margin expansion, and which ones are seeing a larger proportion of margin contraction. Hopefully this week, we'll be having a lot more insights on Multipe.
Great. So guys, one more reason for joining Multipe. If you want one more granular analysis around all this, join Multipe. Also, I floated a quarterly analysis Excel template because, I also do my own analysis. So I'm putting a form there. You fill the form and I will ensure that the tool which I have built, you will have access to that for this quarter. So, make use of all these tools and all these platforms to get more insight on the quarterly results. So a great set of insights, starting from the broader market and then sector level, we went to subsector level. Now, the most interesting thing is what are the key insights at a company level? And I also found some interesting things, but before that, I would like to know from you, Abhishek, where is, the most interesting picture when it comes to companies from result perspective?
So, this is the most sort of talking of companies looking at one quarter number can be a very tricky bit because, and purely on Excel analysis, it is always a tricky bit because one of items. But one general trend which is coming out now is the large cap companies are like a bit than many of the, I would say, smaller companies. And that makes sense because the entire pricing power invariably is more with the. So when I'm looking at the analysis, I'll put that out at large cap, mid cap, and small cap level also. But I'm now thinking time when one should get into boring companies. Capital preservation का भी एक cycle होता है, so we are in that cycle wherein looking at 15-20% kind of returns, and I'm seeing that more in say companies which have done very well. Is let's look at few be Airtel. I'm very interested in the Ebitda margin trend of Airtel. If you look at Titan has done a very interesting set of first time ever. Titan has done 10,000 crore of revenues, around 35% revenue growth YOY, but it has highest EBITDA margins of 14%.
Maybe why don't you share the screen and just show the numbers? I think that would
absolutely
really help.
Let me show you the screen. Yes, or is the screen?
Yeah, I can see.
So let us do one thing now. In terms of companies, I'll show you something like Airtel. We have here Bharti Airtel ka 16 quarter revenue gross margin EBITDA trend. I want to highlight the EBITDA. Let's see from here. If we see it 2 years back, margin was in the range of 30%. In the last year, it moved into the mid 40s. In the last 3-4 quarters, it has hit 50. So that clearly the telecom pricing war, which was going on, is clearly not there at an operating level. And now the question is of debt and the kind of that are happening, and with 5G getting a push again in the budget, I think these are this is a company that is in good sweet spot. Something on Titan. Now, Titan saw 35%, I would say, revenue growth, whereas all the other company space have grown only in the, I would say, 10 to 15% range, which shows that even at that scale, Titan is expanding its market share very.
And this is at a time when everybody's margin is contracting. That's very interesting.
So yeah, if you see here, let's look at this is the EBITDA margin trend. Titan has ever revenue of 10,000 crore plus in this quarter with 14% EBITDA margin also, which is very interesting. So we have a small exercise here. We have mapped the quarter in which the EBITDA margin has been peak out of the last 16 quarter. For the audience, if I were to show you the last three companies that have done the highest EBITDA margin in the last 2 quarters, so those would be very interested filtering those out. So what we have filtered here on the screen, these are companies whose EBITDA margin in either of the last 2 quarters has been the highest EBITDA history in the last 4 years. So here you see the names, and these are the names that I would want to dive deeper on. Disclaimer, none of this is an index, but this is only a starting point for research. We have seen Airtel, we have seen Titan. Now IRCTC again, it's looking very interesting to me. Margin trend, it's done 50% plus EBITDA margins in each of the last 2 quarters, whichever. If we go and see the numbers also, the revenue numbers, it is now again back to, I would say, close to its pre-COVID level. It was around 500 to 700 crores of revenue. and it is again back to 540 crores of revenue in this quarter, but at a much higher EBITDA margin. So that is something very interesting. I told you Agrochem looks interesting. Now UPL has been reporting good numbers. The company has its own share of discussion. I would say some CG discussions, which we will skip for now. Tata Elxsi has been, I would say, the strongest, one of the strongest IT companies, along with L&T TS. Now, Jubilant Foodworks here clearly shows why it is superior in case compared to many other QSR companies. And this happens, like, see the numbers, if you see the growth numbers, it has done ever quarter in terms of revenue, but also has reported 20% plus EBITDA margins in each of the last 3 years. Then Gujarat Fluorochem has a great number. Vodafone, I'll skip for now. CG Power has been one brilliant turnaround story in the Murarka group. Within textiles, KPR Mill to me looks one of the stronger long-term story playing out in as well in the numbers. Devyani came out with good numbers. In the AMC, the best result so far in my view was Nippon. And this used to be pretty hot 3 years back. Maybe time to look back again. Indian Energy Exchange has done fairly well. So we have the names here.
Thanks. Very
we can again look back at this. We'll be publishing this also for the audience. Sort of what we'll do is when the exercise is over, the entire analysis will be synthesized and made available for the audience on a Google Sheet.
Very interesting list of companies. I think the biggest insight for me was when you said, the big companies, they have been able to, some of the big companies, they've been able to retain margin. And maybe because in inflationary environment, the weakness of small size companies comes out. So very interesting. And I have some similar views. Some more companies I will highlight in those spaces where I also saw some companies which are gaining margin. I saw Deepak Fertilizer has gained margins. Thirumalai has gained margins. Triveni Turbine has done well. Some turnaround stories I saw like Juari Agro or Navneet Publication, some of the hotel companies. I think we saw a hotel, the whole industry went lost to profit. Then some of the good companies I saw, they are losing margin and some of them were premium valued. Like V-Guard, I saw, they have gone through a margin contraction. Cement companies also I saw, if I remember, Digvijay Cement, they have lost margin. Some of the chemical companies and, pharma companies, and we saw the pressure is there like Aarti Surfactants or, Laurus Lab or Newland. Some niche companies like Vaibhav Global, they have gone through major margin compression. And in IT, some of the mid-cap companies, they have been able to retain and grow the margin. Like if we see KPIT or if we see Intellect or if we see eClerks, they have been so, one side we spoke about big companies retaining margin, but this is another place where I see even mid-cap companies in IT who have been able to, expand the margin despite of, all the salary hike discussion. And in textile, I see Arvind, Dollar, Siaram Silk, Satluj, they have shown good margin improvement. Also, some of the power companies, they have shown very good PBT and PAT margin improvement. So those were some of the key insights on the company side from my side.
Or do you want to discuss maybe summarize for the audience?
Sure. So I think we started with the overall numbers. Abhishek has covered 80% of the space. And what we saw, top line growth, fab. I mean, I don't know how many quarters back we saw 20% kind of, top line growth, but the same growth couldn't be converted into a EBITDA margin growth. There has been major contraction, almost around 10%, EBITDA growth, which is like, 30 to 40% of the top line growth. And then we saw sectors which are doing well in terms of, textile, in terms of, financial, which is looked like at a very interesting juncture, energy doing well. Telecom is going through a huge margin improvement. Then there are sectors which are seeing a lot of pressure. And earlier there were darling sectors like healthcare, chemicals. These are sectors where there's a pressure. And then we looked even at industries like FMCG and all, where we saw trends where, big companies are retaining margin. Companies like Titan and all, even in this environment, they have gained margin. But there are companies which are losing margin. And we have gone through the long list of companies in terms of textile sector, which companies are doing well in terms of margin. or we have looked at companies like IRCTC. We also looked at themes where companies are converting from loss margin to profit margin, whether there is a whole theme playing, whether it is hotel or there is apparel, premium apparel, or IRCTC kind of companies. So I think these were some of the prominent insights. Anything I left, Abhishek, you want to add something?
Those are good observations. One thing I want to discuss here is the inflationary pressure is here to stay or not. The entire macro discussion is on the Fed right now, and maybe how many rate Fed do. But I think it is a necessary evil, which is only good for the overall market, because the rate hikes would inflation sooner or later. So what is here important is companies which are building capabilities for the longer run. Looking the next 2-3 quarters, I am very bullish on India as a country, and I'm sure this is a sentiment we both echo. We don't have this analysis, Saurabh, but I'm pretty sure if you were to compare this aggregated number analysis for India versus some of the Western countries, Indian market much stronger. And that is something I think the audience, as all of us as investors, retail investors, we should not lose the track of the that India is very well placed. We are entering into, I would say, possibly a great period of capex-led growth. In my view, the summary of doing this exercise is to know that you shouldn't just get too scared out of the market. You might go defensive in your allocation, just get out of too many smaller companies and maybe change your allocation. But no way I believe this is a time to go big in cash, because you just can't time the market. If your view is for next 5 years, you are bound to take money. The focus should be on staying in good companies, and we have many of those, and few of the names we both have mentioned. We will.
Yeah, in fact, let me summarize with the last line. If we look at the Nifty valuation before this result came, Nifty was somewhere around 22, 23. That was the valuation. And if you look at the companies, forget the great top line growth rate, even if you look at EBITDA growth rate, which is worst, still we are growing at 10 to 13%. But if you can take the PAT growth rate, still it is decent. I mean, it's more than 15%. Just imagine if this continues for 2-3 quarters, and let's say market doesn't move for 2-3 quarters. So basically your EPS is growing at 15-20%. So your 22 EPS is going down to 18. I mean, 18 EPS for a Nifty, I mean, that's a fairly valued market. You shouldn't stay out of the market. So my view is this kind of result continues and market doesn't move anywhere. Maybe 2 quarters, 3 quarters, and then it will become attractive and it will have to move. So I don't see a possibility where beyond maybe 5-10% more correction, why the market will not become interesting to buy until less, the results started deteriorating, which we have not seen. I think after a long time, these results are very decent result, but yeah, inflation is something we have to watch. And then we have to see which are the companies which can grow even in an inflationary kind of environment.
Absolutely, sort of completely concur with your view that we might see more correction, but that correction will get bought into at some
stage. It's an opportunity.
I think money, yeah, it's an opportunity. There's enough money waiting to come into India.
Yeah. So viewers, I think this was quite insightful. I hope it was worth the time, but there is much more insight. Abhishek is doing much more analysis. If you want to, keep yourself updated, do be on Multipe and, fill the form, and I will share the tool which I have, and I will try to see, how we can keep it a continuous learning journey quarter after quarter. So Abhishek, thanks a lot to you. Thanks to Multipe. Thanks for your time and for all this brilliant analysis. Hopefully we will work together again soon on some of the interesting videos.
Thank you, Saurabh. Thank you for having me. Not doing this. So this is in a way the first time I'm doing this, and absolutely enjoyed interaction with you. What we mentioned, the company level analysis is only a starting point, what we have discussed. But definitely what we'll do is we'll be highlight results on social media, on Multipe, on Twitter. And if you have any company specific observation, doubts, please tag me or both are there, we'll be more than happy to give you more insights. And yeah, sort of let's look forward to doing this as a quarterly affair. And in the meanwhile, this analysis and start posting in more details.
Sure. Thanks, Abhishek. It was great talking to you, and see you again soon. Thank you, viewers. Thanks for watching. Thanks. Bye-bye.